The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
And welcome to another wonderful edition of the Power Trading Hour. It's wonderful because I say so. I am David White, your squeezably soft host. And this is April 12th at the headquarters of Technical Trading and Investing, TFNN.com. Today, we remember that this was the first day of the Civil War. We always think things are tough. Everybody dislikes each other. But this day, a long time ago, we were actually shooting each other, brother against brother, father against son, north against south. We were able to make it through there. It's always got to think probably a little positive that we could fight a war, get back together, and figure it out. But what can you say? What happened on this day so many years ago was the start of the Civil War when General P.G.T. Beauregard opens a fire on the Union-held Fort Sumter, and for the next 34 hours, 50 Confederate guns and mortars launched more than 4,000 rounds at the poorly supplied fort. On April 13th, U.S. Major Robert Anderson surrendered at the fort. But what can you say? It's one of those things that plunged us into war against ourselves so many years ago. It all worked out eventually. Unfortunately, a lot of people died. We basically forged a better nation. I suspect that one day we will probably get to that level once again. I hope that it isn't soon. But eventually you come to an impasse where one set of people believes one thing and one set of people believes something else. It's kind of hard to think about. Anyway, you can always give me a call at 877-927-6648. That's 877-927-6648. And I've got a comment here from my peanut gallery that says, I look like Lincoln. I don't think I look at all like Lincoln. Huh?
The person you got on the slide did.
The person? Yeah, it was Lincoln. It was the start of the Civil War. Well, who else would I put on there besides Lincoln? Oh, Beauregard. Who's got a picture of anybody named Beauregard? If you found somebody named Beauregard today, you'd say, I think that guy's probably a little light in the loafers, wouldn't you? That would just be, no, I don't know any Beauregards. Anyway, we've got everybody in the peanut gallery out here giving comments, from the programmer for our website to our engineer. Wanted to get into IDC. We talked a little bit about that yesterday. We're seeing increasing weakness, of course, in some of those stocks today, as Microsoft's off another 15 cents. Not a big deal, 22 cents on Intel. None of this news is going to get any better anytime soon. You're probably going to have to go through a quarter or so before the news gets better. I actually opined in the Tech Insider today about why PC sales are down. There's some obvious reasons. There's one unobvious reason, and I brought up exactly why you probably don't need to buy a PC as much as you used to in the past. And we'll look at the rest of the market. I want to update it here just a second. We talked about mostly this market looking to the downside over at least the next 6 trading days. We got a little taste of that this morning, off 7 points on the S&P cash right now, 1586.35. Trying to push it up a little bit, but not finding a lot of volume. Volume was a little brisker in the morning, 2.15 billion shares on the consolidated New York Stock Exchange tape. So it is not huge, and I don't expect the energy to get huge right off here, and maybe even through next week. But I suspect we are pulling back somewhere around the 1550 level, 1560 level on the S&P cash. Some people asked yesterday for a copy of my article from Stocks and Commodities magazine from 2004, whatever it was. And some of the questions I got from some other people made me think that I needed to repeat this. We always get new listeners. But there's a thing, and there's actually a book called The Wisdom of Crowds. And in that book, it basically talks about how if you get enough people together and ask their opinion on it and have them bet on it, normally you'll have a lot of people that are way off one way or the other. The classic example is take a gallon glass jar and fill it full of marbles and put it on the bar on the bar, and get about 25 people to answer you just how many marbles are in that gallon jug. And at the time you get about 22, 25, you're probably going to be minus 4% high or low on the actual number in there. You'll have one person guess 5,000 and one guy guess 50, and there'll be a lot of people that are dramatically off. But once you get enough people together, normally you're going to get a fairly accurate read on where and how many marbles are in that jar. When we talk about the stock market, it's just a little different because it's not something where you buy shares or buy an option and things don't change. In this scenario, we have a nice little gallon jar full of marbles, and we have a small what do we call leprechaun behind the bar. We can't see him, and he's devilishly actually cut a hole in the bottom of these jugs. Now, if let's say that we put 2 red marbles in a gallon jug, and we kind of in the inside, so we really can't see how many red ones are left in there, and the rest of them are black. And this guy comes along and he sneaks up underneath there and maybe puts in another red marble. Well, there is that kind of thing where you've got a problem of actually not knowing what other people are doing. But you also have the inferred knowledge that if there were 2 marbles in there and you actually reach in and you pull out one, you find out a whole lot about how many red marbles are in there. If you knew 2 were in there, you pulled out one, then you know there's only one left. If you reach in and pull out a black marble, and you know that whatever it is, the 500 marbles that are in there, you only have one black, you really haven't learned a whole lot. So just because we pull something out doesn't mean we actually can infer a whole lot from it. Sometimes we can infer a great deal from it. And right now, by looking at the options that we showed yesterday, you can infer sometimes a whole lot by just getting that red marble. And part of what I'm doing in that is exactly that, is that we are seeing a very clear image of how options expiration is setting up. And, there is the issue that 1555 is where it is showing today that option market makers expect this market to somewhere close out, maybe 1560, somewhere in there. It's normally within about plus or minus 10 points on the S&P cash. And that is if we don't have any surprise, the Russians launch the North Koreans launch a nuclear missile at us, nuclear missile, as we like to say in the presidential circles. But it is a mathematical approximation. There's nothing 100% in the stock market, but this is one of these times where the numbers get about as good as they get for showing a lower close into next Friday's option expiration. One of the reasons is the options for May actually show almost exactly the same as the options in April. And a lot of times what you'll see is options out a month from now, or 6 weeks, or 9 weeks, or whatever, are vastly different than what the ones are that are in expiring, in this case, a week from today. I wanted to get into some of these stocks. We talked about what was it, if I can type correctly here. We talked about research in motion last Friday. I think it was was it last Friday? Yeah, it was last Friday. And one of the reasons was, as I was getting my high horse about Kramer, basically telling everybody it was time to buy, load up the ship, you got to be in research in motion. Oh, it's a great company. Yeah, people are sure. And I was basically saying that I've got a new kind of theory, and that is, are they stupid or are they lying? And I don't think Kramer's stupid, so I figured he was lying to help some of his buddies pawn off a lot of shares in research in motion. This thing put it down pretty hard yesterday on news. A lot of people are asking for their money back for the phones that they've gotten. They actually changed the return policy at most of the vendors for smartphones from 30 days to 15 days on the research in motion product because too many people were coming back and returning the first version of this phone. So saw a lot of actual volume on that yesterday. Research in motion out today claiming that, how did you figure this out? What did you do? To me, it was fairly clear from day one. There weren't a lot of people buying these things. There were a lot of bogus articles about selling 1 million of these things the first day. That's pretty much been proved to be a lie. It is a company that has and was a leader. They've lost their mojo, and I don't think that there's any getting it back anytime soon. They do not have the resources, and they do not have the money to put into those resources. They do not have the applications to support other people buying it. Again, they're probably going to have one more heyday, and that's going to be the release of their next product, which has the old classic actual keyboard with the real buttons on the bottom of it with a smaller screen. But remember, this is in a time where people are buying 5- and 6-inch phones from Samsung as the Cadillacs of the smartphone market. So I just don't see how they get it back. Not uncharacteristic for a company that gets rather hubristic about their outlook. They had a great lead, and they decided to squander it and not change the product to keep up. You've always got to be doing that. But basically, they got Thurston Howell III as the CEO. It's actually Thurston Hines? And I just call him the third anyway, just because he's got a crazy name. But I'm sure the guy's very smart, and he's figuring out ways to make sure that this company can give him a paycheck for maybe a couple more years. But there's not a whole lot that the guy can do. Sometimes you get a bad hand in poker. The only thing you can do is fold it. In this case, he's going to drag it out to the last turn of the card. I suspect that this thing is going back into the $5 range, probably midsummer. Maybe earlier. Midsummer, though. I'd say midsummer. We'd see $5 out of this thing. There isn't a whole lot that's going to change in this. We're going to look at disk drive manufacturers when we come back. Give me a call, 877-927-6648.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
As we're back here, we'll check in on the S&P here, see if we get anything moving like a little volume. Nah, not really. 2.2 billion shares on the consolidated New York Stock Exchange tape. Down a point since we checked in last on the S&P cash, 1585. I suspect we're probably going to close around 1582 today, maybe 1581 at the close. If we get some accelerated selling, maybe we could get a little bit more than that, but I suspect on a Friday with a lighter volume, probably not going to get a lot of people dumping their shares before the weekend. What we do know is that gold, in fact, we probably need to actually, no, I don't even have that up there. Gold was down, what, $60 today? And I was trying to actually grab it here, and I noticed I didn't have it up. Let me see if it's, let me grab it here. June gold fell $63.80 to $1,590 an ounce. We've been pretty bearish at TFNN. Tom's made a fairly decent call. We've talked a little bit about Goldman Sachs getting on board fairly late with a gold short here. I was thinking that maybe Tuesday, Wednesday, we may have a tradable bottom in some of the actual miners. But we'll take a look at those in a few minutes. I wanted to show everybody, if you're watching on Tiger TV, a chart, and that is the S&P options curve for expiration a week from today. We're trading out in the mid 158s in the SPYs. When you look at the actual options for them, though, they show that the most amount of money will be lost at about 155.50 on those S&P or SPY calls and puts. Normally, about 85% of all options to 90% of all options will go and expire worthless. So normally you find the center point on that and you look at it, and that's what I was talking a little bit about yesterday. One of the things that happens, though, is a lot of times you'll get a very skewed outlook on what's happening in the marketplace. We don't have that now. We've got both the Mays and the Aprils, both pretty much telling us the same thing. The puts out for May actually fell well, I wouldn't say dramatically, about 50 cents today, which means that we're starting to see a few people start putting money into the May puts out here today. I suspect we're going to have kind of a quiet pullback into that 1555, 1550 level, probably get a little bounce out of it, and then that bounce is going to tell us whether this bubble has finally burst in the marketplace. Well, we got, I can even hear that. Can you hear that? They always tell me you can't hear that in the background. We've got a fire truck right behind us. Anyway, we've got those options. Anyway, I wanted to get in to some other stocks here fairly quickly. We talked about the patterns on STX and WDC, which is Seagate Technology, and Western Digital, looked like they had pretty much topped out. What I think is that we're probably at a inflection point in these disk drive companies that you're going to get, well, you probably have gotten the maximum out of margins that you are going to get. Of course, off a couple of bucks because of discussions of fewer PC sales. But really their market and their business is selling a lot of these new drives to data storage cloud services companies, and they've been doing fairly well, but margins are continuing to get under pressure as more and more of the disk drive shortage of last year fades. What we did see is this thing test its previous high last week. We brought that up a couple of days ago. January 23rd, it had 11 million shares, $37.94. You came into that with half the volume of, about half the volume actually. And just a couple of days, well, a couple of days ago on April 10th, we saw it actually go within 4 cents of that high. I would have liked to seen it break that high and then close back below. But in a high, when you get that close and 50% of the volume, I'm calling that a test that has passed it with just a few cents of it. Actually, I need max volume out here. Let me put that. So anyway, when we actually look at this, you find a fairly decent test of the top with a lighter volume. Now, the thing to instantly do would be to go out and look at Western Digital and see if you're getting the same kind of thing. This one's hung out just a little bit better than Seagate. But you've got two, well, at least yesterday, a high-volume doji. Today, about the same thing. So I'm looking at these and watching these over the next couple of days to guarantee that we've probably hit some kind of a temporary high, at least in technology, and probably ready for the sell in May and go away part. But I have a feeling it's a sell now in April. So we'll be back. We'll look at some other stocks for the end of the day. Give me a call, 877-927-6648.
Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Baby, let me be your love teddy bear. Put a chain around my neck and leave me anywhere. Let me be. Oh, let him be. Teddy bear.
Yes, Steve, our engineer, thinks it should be my theme song out there. Just a big teddy bear. Anyway, we're going to go to Wayne in Mesquite, Texas. How you doing today, Wayne?
Oh, pretty good.
So, what do you want to look at today?
First one was Priceline.
So, what are you thinking about doing with this?
It's jumping all around. It, I think, dropped. Today it was down 14, and then it came back up, and it's up 3.
So, what do you think? Short it, long it? What are you? Which side of the fence are you on this thing?
I'm just looking to find a play.
So, but you don't. You go long. You go short. What are you thinking?
I think right now, I think up.
Up. I would have to probably say this is one of the stocks that's going to be kind of hard right now between now and Friday to get a play on. You had and set the high volume high of 721.96 on January 28th, 1.5 million shares. Tried to bust through it on March 6th with less than 500,000 shares. What do you got? 700,000 shares yesterday. Probably going to get 800,000 shares by the close today. You're going to have a little hammer up here. What you don't want to see on this is Monday is this close back below. But any close back below 721.96 would give you a long-term triple top high in this thing, and with two highs on lighter volume. So this is not really making a really a bullish pattern out here. You know, if I was wanting to go long for a play on this, I probably want to see it pull back to that 721 level and have just no volume, like 250,000, 300,000 shares or something next week, to see if this is actually going to do something. But you should have seen huge volume and a huge candle as it broke that 721 level, and you haven't gotten it. So there's no sign of strength. You like this thing, if you are bullish, to break out heavy volume, bring it back to the 725 to 728 level, 721, somewhere in that area, and then buy it then. But you're going to have to get some kind of sign of strength, which I don't see now. I suspect that when we actually look at this, that it's probably going to go sideways until next Friday. So I don't see that you're probably got a good play long or short in this thing. If I was going to have to buy any, go either side of this, I would be short it. But I think that there's better shorts out there, and I'm kind of bearish right now. There are also much better longs in the marketplace, I would say also. Is there anything else you wanted to look at?
Yeah, I was going to ask about Apple.
Apple probably is going to have a little bit of a positive bias between now and next Friday. When we look at it, this is doing everything that it should to make a nice little bottom. What you don't have is just any kind of people coming out here and buying it. You've had three successfully lighter, you've had two lighter lows out here so far. And it really looks fairly good as a chart. So I would say this would be a better long. The problem is that you've got massively heavy resistance starting somewhere around 470. And, 484, 490 is going to be really tough out here. So the thing I'd like to see is some kind of sign that people are really coming in this instead of just people not selling, which is basically you've got a seller's strike now, but you just don't have that many people wanting to come in here and buy this thing. But the chart does look good. How long, what kind of time frames do you hold?
Well, I was looking at, because they're going to be coming out with earnings, and Thomas said something the other night about one of their suppliers reported earnings down 24%.
Yeah, that's not a big deal, though. You're not exactly sure if Apple just decided to use another supplier. I would, we've gone through the earnings channel on this before on the program. Maybe if I get some time, I'll look at it in the next break. But to me, the chart actually looks fairly decent out here. So you were thinking of going short or long this?
Long, I was going to buy some of the stock and maybe sell mini options.
That's probably not a bad thing. The options point to expiration around 440 for next week. And I could see it get into 440 or 450, even in a down market. This thing's been sold for a long time. There may just not be a whole lot of sellers left. I suspect, as I watch this market, though, we are going to be pulling back. So you may not lose a lot on this one. I just would wait until we find some kind of a low back around maybe 1550, 1560 on the S&P cash, and then maybe try to take a look at it there, which wouldn't be any more than 1 or 2 days pullback in this market. And I think you might be able to find out whether the stock is going to be able to hold that area. To get a buy on this thing, you need it close above 435 with less than 43 million shares, which I don't think is a problem. I just don't think you've gotten that yet. And every time the last couple of days it's gotten up to that 435 level, it's pulled back. You had a little doji on this thing yesterday and a pullback on lighter volume today. If you had a market that really wanted to take off here, probably not a bad play. And I even think that even in a pullback, this thing's probably going to hold up fairly well. So probably one of the least risky plays out here in the market. But again, I'm not going to be buying it. Okay. Well, thanks, Wayne. We're going to look at some other stocks here fairly quickly. Wanted to look at a few. If we get to a few. One was it? We had earnings come out this morning. INFY, which is Infosys Limited. They are a big company in India. They had a huge earnings pop back on the 11th of January. Massive volume. Went sideways forever. Basically started telling everybody that they were going to have 12% year-over-year earnings increases and revenue increases. Basically, they came out and said that, things kind of really went sour in the last 4 weeks. We're changing that to 6% earnings, and basically took all their forecasts for the next few years down. So instead of having 12% and 12% earnings over the next 2 years, they were saying 6% and maybe 3% in the year after that. So from 24% increases in earnings to 6 and 3, so 9%. Hugely off on massive volume today. They had gapped up. This thing jumped right back down the other side of that. But this was an Indian company. I'm always worried about their forecasts. They tend to be, how can I say this? I can't say that they're manipulating their stock, but it certainly seems like a lot of times that the Indian companies have a economy with the truth. Maybe that's the way I should say it, in what they're looking at out there. So be very interested when you look at Indian companies. If they are talking about huge increase in profits, be very careful when you get into these things, because a lot of times they turned out just like these Infosys systems. I can't check it right now, but I'll probably check it during the break and see if any of the executive officers were heavily selling over the last month or two. Let's see what else we have out here. Okay. There we go. Looking at some other companies out here. BPZ Resources. In fact, let's go ahead and look at some of the gold stocks while I'm thinking about it, and see how they are doing today. I've got a problem with my internet connection in here, which we have occasionally from time to time. And let's see whether or not... see if we can get it just restarted here. GOLD, Rheingold. We were talking about finding some of these gaps out there. This one, it looks like it's headed for that gap at about $75 for Rheingold Resources. Of course, fairly decent volume today, but for off $60, I could see this being a lot worse. A lot of these stocks in gold have been trading like they're going out of business, and we're probably, I think, going to have some kind of oversold bounce, and it may be actually huge and significant in these companies over the next, I don't know, probably 3, 4, 5 days or something. It certainly looks like we're going to get to that level. Was it... trying to think of some other ones actually what I'm looking at here. GLD. Let's actually look at the GLD, since that is moving out here. Yeah, I mean, even GLD so far, not a lot of volume. So I think we're probably getting to some level where we're probably going to have a short-term bounce out of this in the next few days, and probably setting up an ABC down for an eventual leg. So I thought maybe next week, maybe it's going to take another week or so, but I suspect we're going to have a blowout to the downside may see forced execution of trades. Tom's talked a little bit about that. Maybe when he comes in at 4 o'clock hour, he'll bring up a little bit more about that. But a lot of these big funds may be forced to start selling the things that they have, like gold shares that are losers, not only in the miners themselves, but in the GLD. Paulson, of course, is the big guy. I'm always looking for an alternative or ulterior motive when I hear Goldman Sachs say that gold was going to $1,400. They may have Paulson on the ropes. A lot of times those big guys trade with the same people, and maybe they've got a lot better idea exactly where the pain threshold is for Paulson having to sell those things. But I always look at it thinking that normally when I get a sell signal from Goldman Sachs, that within about a week or so, I'm actually looking and thinking about buying. Maybe this will be the washout of all washouts before this thing turns around. RIC, I have a question from the den. You can also give me a call at 877-927-6648. Richmont Mines does not look bad. I mean, a lot of these charts in the gold, I suspect, are going to get weaker into next week. We're probably going to have some kind of washout, but a lot of these things don't look all that bad. Ridgepot Mines symbol is RIC, 300,000 shares on the last low. It got to within a penny of that. Let's see, the March 6th low was $2.23, 300,000 shares. Got into it with two-thirds of the volume on April 4th. Penny light on getting down there and testing the low. What do we have for a low today? 224. So yeah, you're still a penny shy. I'd like that to actually hit that 223 or even go a little lower. And with gold finding a weekend and maybe having the possibility of forced selling in gold, I would actually want to see and say that you probably want to wait 3 days to find out if there is any forced gold selling out here after the move we saw today. Because it is, you get a $60 move in gold. I've been trading on days when it's been a lot larger. But it normally, gold has a tendency, especially, to trade and blow out a lot of traders that are trading the futures on gold. And when they do, they give them a couple of days to normally get stuff together. A lot of them will actually punch you right out as soon as you hit your margin requirements. But it is not unlikely that a lot of future players in gold were up fairly tight to the margin requirement, and you wanted to see if any of these guys are sneaking out over the next couple of days before you find out whether or not you want to delve into this thing. I don't see anything in gold that tells me the low is in today in either the miners or the actual metal itself. So what else do we want to look? Oh, I wanted to look at the NASDAQ out here. We did talk about INFY, just other stocks moving out here. MCP's off 4%. GLOD, of course, Rheingold Gold, is off 3%. One of the things that he was talking about, AVGO, was talking about Apple and their suppliers. I've been waiting for some of these suppliers actually start looking good again. Avago Technologies is a major supplier to Apple and their iPhones. They're down, not extensively here today, but I haven't, I've seen kind of a giant consolidation in this thing. Still doesn't look like there's a lot to be said for these companies that they're ready to break out. But, do they look all that bad? I know a lot of other sectors that look a lot worse out here in the marketplace. On the winning side of stocks in the NASDAQ 100, we had Intap up 5%. That's NTAP, of course, the maker of subsystems. And this is kind of even an inside day. This is kind of even an inside day on this. Gave back about half its pop here this morning, but lots of volume, but still in that trading range. So we'll have to keep an eye on it. We'll be back. Give me a call, 877-927-6648. That's 877-927-6648.
Are
you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of tfnn.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
And as we come back, looking at Barrick Gold ADX, the symbol on that today, and we've got huge volume, huge price spread. And it looks like this thing's going right after that $17.27 low that happened October 24th of 2008. We're probably going to have that kind of volume so far today. It hadn't gotten down to that, 2260 low out there so far today. But the day isn't over yet. So we'll have to continue to take a look at it. We've got a lot of these stocks that are looking fairly weak. What else did we have out here? I wanted to look at few others. AUY. When we look at this, it's got a nice little gap that I suspect that it's headed down for. We're going to see probably early next week in the 12s. It got down to 1302 so far today. And you got a nice little gap and decent volume back in here. But when I look at it, it looks like it's probably headed back for those gaps that we saw there. It's going to be kind of tough. This thing is right in the support range already. Not doing all that bad so far. Let's see. Let's take a look at GG real quick. Another one that doesn't look so bad. I suspect, though, that we are blowing through some of these lows on lighter volume, but we're probably going to get into that and probably get back to some of these lighter gaps where a lot of these gold stocks actually took off. This one has a nice gap down around that $24 level, and you could see it getting pushed down $4 or $5 over a couple of days, and just everybody screaming to get out. At that point, maybe this is the time to catch it. You could see gold drop $100, $150 a day, and it may be the hardest thing that you have to do is buy a stock when it looks like the end of the world's coming in gold. And you might get that next week or the week after. I think we're fairly close. We're seeing a lot of bubbles burst. I've been talking about Bitcoin this week. Gotten to 265 on Wednesday. It's gone down as low as 70 today before they close the exchange once again. When you start seeing bubbles burst, it's normally you start seeing them in several places. And I suspect that we've had kind of a mini bubble in gold caused by the Fed's with central bankers, maybe that's the way we should talk it, over the world, and I think we're probably going to continue to see some of that continue to ripple through. But alternative currencies are not having a good week or a good day, and I think we're probably going to see more and more of that over the next week or so, and probably going to see weakness in everything, including the equity markets. What do we got back here? I didn't check it. We were still around 1585 on the S&P cash, and 2.4 billion shares. So not a lot of movement, not a lot of volume. I suspect what we're waiting for is the last 30 minutes of trading to actually get a better signal, but probably not going to get much more movement until Monday. I think maybe 3-4 points down. If we stay down before the close, we'll probably get a few people exiting stage left just before the close of the day. Not looking for a huge move before the end of the day, and still think 1582, 1583 is probably a good place for us to close out here today and the week. Anyway, what was I looking at out here? We were looking at GG, and what else was I looking at here? GG. That's it. Let's see what else we have. Mid-cap, IOC, ASH, WRC, MWP. Cool. Well, we're out of time anyway. Didn't get to anyone. Oh, NGD, isn't it? NGD. We're out of time. We will see you. Take a look at NGD2, getting close to a test on that $7.13 low. See you same bat channel, same bat time on Monday, and in the 4 o'clock hour with Tom O'Brien. See you then.